Hi there, welcome to kneppyinvests. I decided to do a bit of a technical update in today's video, looking at the charts for six particular companies. Five of these companies I do not own, but they are interesting charts. And one of these companies I do own, that is A2 Milk, which is or has been a fairly popular retail investing stock. Not only retail investing, also fund managers love this company or used to love this company. But the company has fell on hard times over the past few years, particularly because of what's happened in coronavirus and lockdowns and significantly less Chinese tourists and students in Australia. That has affected that company. But I am waiting for a bit of a turnaround in A2 Milk's fortunes. They did about four profit downgrades from about middle towards the end of 2020 up until May 2021. But it's been almost 1 year since the last A2 Milk profit downgrade. So it does look like the downgrade cycle has come to a completion for this company. And sometimes, but not always, what comes after a downgrade cycle is an upgrade cycle. So I am waiting patiently with this company to see when the share price starts turning around, when sentiment shifts to positive. But I'll talk about that when we get to A2 Milk's chart. The six companies I will be featuring in today's video include A2 Milk, we've already talked about that. We'll also be looking at Paragon Care, Aurizon, Platinum Asset Management, Costa Group, and Graincorp. You might see a little bit of a similar theme or common theme here, particularly Costa Group and Graincorp. And when it comes to particular sectors in the market, in the equity markets, you will see particular sectors go on runs at certain times. And that's what's exactly happening with the food sector right now. Those companies, those myriad of companies that are producing food, particularly when you talk about fruit and vegetables, we are seeing those companies benefit from what's happening with food prices around the world. And Costa Group and Graincorp are taking advantage of that. You could say A2 Milk fits in the same sort of category. They produce milk, but we haven't seen that company take advantage of that yet. I'm not sure if it will. Paragon Care, share price has been increasing for about a year now, and share price is in a well-defined uptrend, but share price has pulled back, a possible buy the dip opportunity with Paragon Care. Aurizon ships, they have trains, those sort of things, primarily in the commodity space, primarily in coal. Now, I have heard them talking about diversifying, but they do transport coal on ships, so on trains. So you would think because coal prices have gone through the roof, Aurizon should be taking advantage of that. We should be seeing a similar rise in the share price of that company. We haven't quite seen that, but it looks like just a possibility that Aurizon share price might be breaking out. And Platinum Asset Management. I follow this company, don't really want to own this company, but we have seen the share price fall a fair bit. And on the 8th of April, the last trading day of the week, they released their funds under management. The market didn't like it. We saw share price fall 15%. So this company is an example of a possible turnaround in the future. So I do have this company in my turnaround watch list. Just keep an eye to see what happens with the company in the future. In these sort of situations, you don't want to be too quick to take a position. You want to remain patient. That's just in my opinion. First company I want to talk about is A2 Milk, naturally enough. And this company's share price really has been in this trading range for the past year. The last profit downgrade was May last year. You can see the share price fall a fair bit, reach low just about $5. And then we did see some periods where there was a little bit of more hype in the company. That's why share price rose to about $7.40 on two occasions. The last time it rose to $7.40 was in October last year. So it's about 6 months ago. Share price is still moving down. You can determine or know the share price is moving down because the moving averages are still drifting lower and lower. Share price is drifting lower and lower. But every single time the share price has reached the support level, which is the lower band in this trading range, we do see a little bit of buying and the share price does bounce. But recently, in the past week, share price has moved below that support level at about $5.10. In fact, Today, I am recording this video just after midday. The share price of A2 Milk was around about $4.85, well below that support level. So there's a possibility right now that that lower bound in this trading range has been broken, which is actually bearish news for A2 Milk moving forward. Now, this could be just a short-term break of that trading range, and we might see a bit of a rally in the share price. But if we don't see that rally in the share price, this is bad news for A2 Milk, and there could be further to fall in the share price for A2 Milk if it is not, or if we get confirmation that this support level has been broken. Now on to Platinum Asset Management. This is one of those fund managing companies, sort of like Magellan, and Magellan share price has a fairly ugly looking chart, just like Platinum Asset Management. If I remember correctly, Platinum Asset Management is all about value. So because over the past 5 to 10, maybe even 15 years, value has not been in vogue, although you might say over the past year has been. So if this company is assets or value investor, why has the share price really been going down over the year? Ever since June of last year, the share price reached about $5 and current share price is less than $2. And then they did release their funds under management the last trading day of last week, the 8th of April. And that's why we do see a big, large selling on that day. Share price down 15% on massive volume as well. So not good for Platinum Asset. There's also a nice downtrend, which is that downward sloping dashed line. I've maintained the moving averages on here, but if you just ignore those moving averages, that downtrend has been hit about 3 times in the past. So it's a pretty good downtrend. And the day before they released their funds under management, share price actually did move above that downtrend. So that is not confirmation that the downtrend in this company has come to an end. We need confirmation. And then the next day we had that big sell-off. The share price reached a fairly long-term low. Now, this horizontal orange line I have in there at around $2.62, that was the COVID-19 low in March 2020. And that was a fairly significant line or price for me. That's why I put it in there. And the share price has fallen well below that. So lots of negative sentiment with this company right now. Share price in a well-defined downtrend. Really large volume coming in on the day we saw a large sell down. That is not positive news for this company moving forward. I think there is a lot further for this company to fall from here. And this, even though this is a possible turnaround story in the future, or you can say it is possible. It is not a definite. And a lot of turnarounds don't turn around. They keep on falling. And eventually, the future is not bright for those companies that do not turn around. So a lot of my turnaround companies never make it. They never turn around. And maybe Platinum Asset Management is one of those companies. Now onto Aurizon, and this is that coal transporter. They have those big trains transporting coal. So I thought maybe the share price of Aurizon would be highly, maybe not highly, but closely correlated to the price of coal, but not really. We haven't seen a share price take off in this company, but maybe there is a bit of lag before the market takes notice. Maybe the market wants some numbers to confirm that the financial of this company has been benefited from the increase in coal prices. I don't know. But the share price has moved into at least a short-term uptrade. We have seen the share price get to about $3.85 on the 8th of April, which is the highest price since October last year. So almost, not quite, but almost a 6-month high. And that is one thing I do look for in possible breakouts. I do want at least a 6-month high, preferably about a year high. That means there is a greater chance that the breakout will be successful because there will be less resistance moving forward. It's all about psychology. So if you look at the share price right now with Aurizon, say it's at $3.80. Now, if you go back to last time was $3.80, that was October last year, which means there's a lot of shareholders who bought in the last 6 months at lower prices. They're in the green, and not many shareholders who have bought in at higher prices in the red, because those shareholders would have been holding, will have to hold this company for at least 6 months. That's why I want at least a 6-month high, less shareholders underwater, and the less shareholders underwater is better for the potential of the share price to move higher. So share price right now is moving into a nice little short-term uptrend, some nice positive sentiment behind this business. This is a potential buy, in my opinion. As we take a look at Costa Group, now I hadn't been really following this company's fortunes until the company released their February results. And when they released their February results, initially the market really liked it. Share price went up about 10% on that day. But the next few days, about 4 days, we saw a lot of selling, and that selling pushed the share price down from $3.30 all the way down to $2.70. And $2.70 is a really good support level for this company. That would have been a good buying point if you were inclined to buy this company just based off its fundamentals. But we've seen a nice rally over the past month since the share price reached that $2.70. And in fact, on the 8th of April, the last trade day of last week, the share price tried to get above the share price we saw when they released their February results. The high that day was $3.30. Share price closed just below that. And that's a very important level because I want to see the share price of this company get above $3.30, which would mean at least a 6-month high in the share price. And remember that Aurizon, that is one thing I'm looking for. And if the share price rallies from there, say goes to $4, if it goes to $4, that would mean at least a 1-year high in the share price for this company. So it does look like Costa Group is, well, their share price is at least, looks like it's turning around. It's moving into an uptrend. We are seeing a possible cross in the 50-day and 100-day moving average. That's also a little bit of a bullish sign. So there are some bullish signs when it comes to this company. And those bearish signs we've been saying over the past year, share price moving down, negative sentiment in the company, even in maybe the whole sector. But this company grows food. I think only fruit. I'm not sure if they grow vegetables, but there could be higher prices in those areas. I'm not sure. And these are the reasons why there could be a little bit more excitement in this company. Also, because of their financial results in February, there was some positiveness around that. So it looks like the trend is shifting in this company's share price. The sentiment's shifting as well. So lots of bullish things going on for this company right now. And that's why I'm paying closer attention to this company's share price moving forward. Now to Graincorp, and this is one of those companies that is benefiting from the overall bullishness in the food sector, probably the one sector right now, except for commodities. And when I say commodities, I'm talking about mining commodities because a lot of food is commodities. In fact, most foods are commodities and they're called commodities. Grain is a commodity. Corn is a commodity. Pigs are a commodity. So a lot of bullishness in commodity sector when you go from mining all the way through to food production. And Graincorp's chart is an indication of that bullishness in this sector. Share price from the bottom left to the top right. That's exactly what you want to see when you're owning a company. On the 8th of April, the company released some good guidance, either guidance or some results in regards to how their business is traveling. The market liked it. That positive momentum has continued into trading on the 11th of April, and the share price is moving towards $9.80. On the 8th of April, share price finished at $9.20. So share price in a well-defined uptrend. Nothing going wrong with this company right now. Good financial results. The only problem I see with these sort of companies is I don't think they are long-term holds. What you want to do is take advantage of when there is bullishness in the sector, and eventually that bullishness will turn around. This is true for all commodities. Now, in my opinion, there is no long-term hold in any commodity space. It's the sort of companies you just take the positive momentum and ride with it. Just like Graincorp, Paragon Care, share price has been an uptrend over the past year. So this is the 1-year chart for Paragon Care, a really well-defined uptrend. It's very wave-like. You can see troughs and peaks with the share price. And the time to buy these sort of companies is when it's the dip in the share price. Buy the dip. And that's the reason why I'm featuring this company in this video, is we have seen a share price fall from about 48 cents all the way to about 38 cents. So a bit of a dip in the share price, and now would be the time to take a position. The only problem is we did see a nice little dip in November, nice little dip towards August of last year. And when we did see those share price dips in those months, the share price met the trend line. So we'll say a medium trend, which is a sloping line going upwards. We also have the 2 moving averages. They're not straight lines, but preferably would have liked to have seen this dip meet the long-term or medium-term trend. That would have been a nice, good, bullish signal to take a position in this company. A low risk signal as well, because if the share price moves below the trend and we start to see a share price fall below the moving averages, that would mean this uptrend in the share price of this company has come to an end. That's all I have for this technical update video, looking at 6 companies, including A2 Milk and 5 other companies I do not own, but I am following just based off their charts. And for example, Plateau Massive Measurement, I have no desire to buy that company right now. Lots of negative sentiment, but a few other companies are looking interesting for potential buys. I won't say if I am going to buy any of these companies. I'll leave that to you. The most important thing is you make your own investing decisions. I just like to share ideas with you. If you have any questions about any of these companies, I'd love to hear it. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.